Well, hello everyone, I'm L.A. Little and this is your weekly NeoTA wrap. We take a look at these markets and we do it from a neoclassical perspective, each time asking ourselves just one question: what happened last week and what does it tell us about the coming ones? I do this show once a week, every Sunday night, broadcast at or before 10 o'clock Eastern Time. Is archived on YouTube. You can catch me there under the channel L.A. Little. So check it out, subscribe. Anytime content's pushed, you'll be notified. Last week, let's look at what happened in terms of just the raw numbers. It pretty much was a mixed week. We really didn't get any big up or down. We had S&P down the most. We had NASDAQ up the most. You can see on the year, still holding on to gains. And you know, if you think about it, even if you take the S&P 500, that's a 13+% gain on the year if it were to hold that kind of a projection, right, for the year. So, you know, once again, after 3 years of up, we've got another year of up starting up and hasn't backed down yet. Let's look at the markets here. If we start out with the S&P 500, let's pull the weekly chart over. You go over the highs, right? You get an extension. Volume tails off a bit as you go up, and now you get an over-under on the S&P 500. Volume slightly less, but it's not really a 2-bar. You haven't gone that much. That kind of suggests that probably some sort of a continuation of the pullback that started Friday may be in the cards. And talking about that pullback, if you remember, you know, Wednesday night, I talked about you probably had the best chance of some sort of a retrace to take place because we had over-unders on all the indexes. No, they weren't 2 bars because they had slightly more volume, but you had over-unders. And in fact, we got a pull down on Thursday and a continuation on Friday. Looks to me like this is going to try to get in a little bit deeper. If we do a pure neoclassical view, that would say that this thing is shooting to come back in and do a retest regen once more on this prior swing point high bar. So that's kind of where that sets up and how it sets up. If we look at the NASDAQ and look at what's happening there, it's just a little bit different of a picture, but not that much different. Let's start with the daily chart. So large, steady, straight up move. Remember, we were up 10 bars in a row until we got a quote-unquote down bar on Thursday. On Wednesday. That was the over-under. Shoots back up on Thursday, and then Friday, finally, you see some volume coming off of this thing. On terms of the actual price points, it was an inside day, I believe, if I remember right. No, I actually got over. So 89.25, so you get over it, you have a little bit more volume, so it's an over-under with a little bit more volume. So once again, suggesting that this is wanting to try to come back. If we look at it on the weekly, if you remember in the neoclassical, or if you're not familiar with it, I'll explain it. But in the neoclassical view, when you get a breakout and it involves multiple swing points, and what I'm talking about with multiple swing points is we broke out on the daily chart and now here on the weekly 2 weeks prior. That breakout across this swing point high, right, leads to a push up, and usually, almost always, not almost, but you know, a very high percentage of the time. And it depends on a number of things, the type of breakout, the type of trend, so forth. But we're talking, you know, anywhere from 80 to 90% probability. That type of a breakout is going to lead to an extension, and typically it's 2 to 3 bars. There's bar 1, bar 2. Are we going to get bar 3, or are we actually already got them and get our retrace? Now, if this comes back, the retest regen would be on that prior swing point high. So in this particular case, we would see it come back to that high, which is 48.14. We're currently sitting at 49.63. So you can see that would be quite a drop to get back to there. My expectation is that it's not going to come in that deep on the first retrace, because typically when you get that kind of a move, the first retrace is fairly light. And part of the reason to think that is that if you also remember, we actually have both range trade breakouts and ABCD structures to take this market higher. So the ABCD structure here, you can see a large projection on the weekly. If you take it back to the daily itself and look at the daily chart, even the daily chart still has, well, actually the daily chart has a different situation, and that is the ABCD structure here had already finished. In other words, we went from there to there and we finished it off already and actually overextended. But if we look at it from a range trade perspective, and we go back here and we just take the bulk of that range, that could extend still farther up. In other words, we could push up to here before it's done. So depending on what you're looking at, some of the extensions have been met, some haven't. Some of that's still in play. And once more looking here, you can see that range trade on this time frame. And you can see it fairly clearly here. And another push up about equidistance would take you up there. So still more up to go, it appears, but we may get some choppy action this week and some pullbacks. NDX looks almost exactly the same, so I'm not going to push that one on you. I'll push over to the Russell and pull the Russell up, and if I look at it, the Russell 1239.22 goes over it, back under it, does 354 versus 340. So again, more volume, over, under. Not a 2-bar, just an over-under. This one on a daily also has an ABCD structure in place, and that one is not done. It's not done on the S&P either, and you can see that projects up quite a bit more. The retest regen, if it wants to come back, is way back down here, which would be a pretty good drop still. So again, we've got a mixed picture. Looks like some sort of retrace trying to come back. The big bar on all these indexes is from February 20th. So that's the bar that it looks to me like it's trying to come back into. That's the bar that I would be watching in terms of, you know, how far this thing's going to try to come back and how does it act when it comes back into those price points. Looking at it on a weekly, the Russell's over the highs as well. Got the breakout back here, retraces, back up, over again. You know, on this time frame, you really just have, now the Russell, of course, it was different, but you really have a large range that had built up, and that range, if that one projects up, right, is huge. So, you know, I don't know that this one's given us good signals on this time frame. It is on the daily, not so much on the weekly. If you look elsewhere, there are some other happenings that we should probably look at. In particular, if we look at the sectors, there's 2 or 3 sectors that have started to come in. I'm going to pull up the XLK as an example. So the XLK has a huge run up, finishes off its ABCD structure. It's over it at this point, more so than it should be. So it's actually gone up farther than it should have. Having a hard time up there, right? Volumes are okay, but having a hard time. Goes over, back under on Friday. That one looks like it wants to retrace. Where's the retrace? Well, it's pretty deep if it wants to come back that far. So on the XLK, it's way back here. Again, that same bar that I'm looking at everywhere else has prominence here. And that was Friday a week ago. Not this past, but the past Friday. If you remember, traded down. The market in general traded down, spiked back the other way, closed out strong that Friday, and held things up. Let's take a few minutes here for an info break, and then I'll be back to look a little bit more at some of these sectors and to give you some more ideas about what this market probably holds. Be right back.
At TA Today, we have many services that teach trading to our clients. You can use LA's tools to trade and or learn how to trade alongside LA using his neoclassical methodology. To earn these free services with no subscription or charge, go to our homepage, click on either the tools and earn free services or trade with LA and earn free services. On this page, you can refer a friend. Fill out information about yourself and the friend you are referring, and you will earn up to 3 months of free service with no charge as long as your friend continues to be a subscriber. So remember, refer one friend and earn up to 3 months of free service with us. The more people you refer that sign up, the more months you earn. If you have any questions, let us know. Thanks from the TA Today team, bringing you tools and ideas to help you trade.
Now, one of the things we were talking about before and looking at, if you remember we talked about this last week, was that we were expecting some sort of a rotation to take place, right? And we got the breakout, for example, here on the XLI. We also had it on the XLV, if you remember, and that was the rotation. We were wondering if we were going to get it, and if we did get it, would that prevent us from pulling back? Well, yeah, we got rotation for that day, but then it just kind of hung there and never could get going, and now we're starting to fade back in. This is a bullish retest, regenerate. It's coming back with low volume, so it looks okay. The problem is that it's coming back so quickly. Usually that gives you a lower odds in terms of actually retracing and holding. Given the width of this bar and the fact that it came back within 6 bars, it can trade to the bottom of that range, and I would assume this little area right here is where it's trying to get to. And again, this is one of the things, if you're watching these markets and doing the neoclassical view of it, you look at that and you say, okay, that gives me a place that I can look and see how it behaves as it comes back into the low of this and the low of this bar. That's an area right there. It really should try to hold there if it gets into it. If it does, gets a bounce up, well, what does that do? That puts up ABCD structures again on some sort of a retrace, right, to take this thing higher. And this is really what you're looking for. As things pull back, do they come back to areas that they should hold, right? That little zone between those two bottoms, and then do they regenerate back up? If they do, then you can expect this market's going to go up and try to meet some of those targets that it still has on the broader indexes. And that's what I would be looking for as a student of the market with respect to what does this market want to do. The other things I'd probably be looking at are over in the OX markets, in particular the dollar. Last week the dollar pushed up. That swing point high up there is 25.21. We got up to 25.23, closed at 20. We did 2.5 million roughly against 2.3, so we hit it with volume. Looks like it's going to try again. Got over one swing point, trying to get over the other one. Folks, this particular scenario, and it has gone sideways now for 5-6 weeks, but if this starts to just take off again, and if we see it roaming higher again with reckless abandon, that's going to be hard on the equity markets because as the dollar gets stronger, that takes away from corporate earnings and so forth. We saw that in the first quarter, and you can expect that others are going to see the same thing as this new year continues to roll along and as this dollar continues to try to roll higher. Remember, we had a big ABCD structure up here, finished off, and now it's been going sideways. This is on the weekly, right? And so as we go sideways here, what you really want to see is you want to see it keep going sideways for a while, at least. You don't want to see it just take off again, because if you do another one of these takeoffs, that's going to put a huge pressure on the equity markets domestically, and it's going to make it very difficult for these markets. So I would be watching the dollar. The dollar's a big tell. And another one in that same camp is the bonds, because the bonds are going to be reflective of weakness in equities. Now the bonds have actually been trying to come back down. I've talked about this structure on the way down on a weekly. It's doing its push up and now potentially setting up the push back down. And really, let's just look at it on the weekly. Here's that ABCD structure that's starting to take place on the weekly. And if that was the high, it's going to take it down into these lows off this big bar. That's the bar that I think it's going to try to test that low. If it does that, equities are probably going to perform well. Now, if last week's reversal continues higher, then you got a totally different story, right? Because then you're looking at an ABCD structure back to the top side to go back up and make higher highs. And so right now the jury's out on which one's which. If you look at the volume tails suggest it is going to come down and try to test this low. But that jury is still out here, just as is it on the dollar. Those are the things I would be watching, along with the other one that we have to keep watching, which is oil. Now, oil has been trying to hold and build out some sort of a base, but I would not be surprised to see oil drift back down, and if we put it on a weekly, drift back down and start testing these lows again. In particular, this low from January, early January. That's about 1710 on the USO. That is the critical area. That's the last kind of major support area. It has been holding on a weekly basis to this big bar up. That was a big short covering rally, the low 1793. It closed at 1810, it traded as low as 1758, but closed at a higher high or a higher value than that low. That says that more than likely oil is going to stay in this range and keep building out some sort of a range. So far, oil is doing what it needs to. Bonds, dollar, not so clear as to what they're doing, and we'll have to wait and see how that plays out. Let's switch over and look at some viewer questions next, and then we'll come back. Okay, so let's look at a viewer question here. It has to do with the GDX, and that's the gold miners. You got a bunch of swing point highs that have formed after this big push up. And matter of fact, let's just look at it on the weekly basis to start with. So gold on a long-term basis, and I'll pull over the monthly chart. On a long-term basis, has traded lower and is still in a downtrend. Hasn't changed. We did get the push up to the swing point high, and it traded right to the top of it, right, in terms of value, and then the next bar is back under it, or in it, I should say. Okay, now this has left high volume lows, big bounce, now pull back. Question is it gonna shoot back up on the GDX, the gold vectors, the market vectors, gold miners, and these are the large cap ones, or is it really putting in some sort of another move down? And so far on this time frame, this story hasn't been told. In other words, this swing point low, that retest so far is a bearish retest that's regenerating or attempting to regenerate to the downside, and that is in conjunction with this trend, right? So you get a sideways move, a push down, now you come back up, you test, you fail, or if you do, then more down. That's the way that usually works, and the way that's trying to work. If we pull over now and pull it into the weekly, here you can see a slightly different scenario, and here you actually have a big push down, right? And so you get an ABCD structure up, right, that more than completes, and now you have the potential on this pullback for another ABCD up, right, that could take it back to these highs. That's the potential. At the same time, you have a swing point low over here. This is a retest regenerate bearish that tried to regenerate down to the backside, in other words, back down the other way. So far, it has done that. But if it comes back over it, it's a totally different story if you get over it. We just don't know what it's going to do yet. So when you look at this, right, again, high volume low, just like it is on the monthly, high volume low, big bounce, volume characteristics are positive most of the time, most of them. Now you're going to try to come back up. This is going to be the test again. If this gets up here, fails, this thing's coming all the way back down. If it gets over, it's a totally different story because it not only changes the trend on the weekly, but also changes it on the monthly. And if you zero in, and this is the way it always works, it's already changed on the daily. In other words, you got over swing point high here, you got over one there, right? You're doing all the right stuff. Now you're coming back, you test, And in particular on this particular chart, right, you tested right back into those areas that you would expect, the overlap of these two bars, you would expect to find good solid support. Matter of fact, I could draw it even more narrow to be there, and looking, lo and behold, where does it go? It goes right back into the overlap of those two bars and pushes back the other way. As a matter of fact, I'm a little off because this bar is this particular one. So that's just a wide price spread down bar. So really the overlap, let me do it one more time and do it correctly. The overlap is really not an overlap as much as a congruent area, and that's the congruent area. So it comes right down to it, trades just a little bit under it, and back over. How does it look to me? Well, it looks okay. Is it going to go higher or is it going to go lower? That's a toss-up. On this time frame doesn't tell me. If I look at the other two time frames, the trend is against you. The trend is heading down. So this is quote unquote a counter trend trade still until those weekly and monthly swing points no longer, the ones that were broken, the bearish ones, once these are cleared, they will turn this more to a sideways trend. But until they do, it's not clear if that's going to actually happen or not. And so at this point, it's just not in the cards yet. We don't know what that answer is going to be. Viewer also points out, same one, about Newmont. Newmont's one of the big caps inside this group. If I look at Newmont, Newmont's doing well on a daily, breaking out again, had earnings, popped up on earnings. On a weekly, also coming back to test the highs. Newmont looks great until you get to the monthly, and then you realize that, hey, Newmont is kind of in the same boat. Now, the thing about Newmont that's different is Newmont now has traded over it. We don't have that in a bunch of these, but last week it actually held it and traded over that bearish retest regenerate. So that says Newmont can trade back up to these resistance zones on a monthly basis, back higher. Of course, it has to get over the swing point high, build some momentum. You got two swing point highs here. So, Newmont's doing the right thing. I'm not sure what the particular news is in this one, but it has traded well, has nice ABCD structures, going for the highs, got volume. Newmont's doing everything you'd want in terms of an individual stock. And with that, we'll pause and move on to the final thoughts of the evening. So when I think about the market and I think about what's been happening and I look at what's happening this next week, right? We still have strong equity markets here and around the world, but in particular around the world. And so when this market pulls back a little bit off a huge run, and folks, you have to try to always put it in context. You went from 1981 to a high of 2119. 1981. That's a 200 plus point move. That's not, well, it's not 1981. That's not quite. That's 100. 19. Yeah, it's a 130 point move. So a 130 point move off the bottom, right? And a 130 point move off of this, that's a pretty large price point, right? You're talking about 7% or something in the major index. So when I see something like that, and I look at, I guess it's 6.5%, 7%, and I look at it, to get a retrace is a normal occurrence. So I don't think one can, you get a little bit of a pullback here, I don't think one can jump to the conclusion that, okay, the world's coming to an end. There's the old adage that the trend is your friend, and the trend is pretty clear here. It's up. It's not sideways, it's not down, it's up. There's been one big spill in 3 years, and it was quickly bought and taken back the other way. Now, of course, it's important that this not give up too much ground and then continue on up. If it does that, everything's rosy, right? Everything looks great. If it doesn't, then we can worry about it. But at this point in time, you're getting a pullback. You got some over-unders. You got some retest regenerates that you can use to measure as this thing comes back. That will give you more information about what kind of a pullback it's going to be, how deep it's going to be, that sort of information. So when you look at the market and you look at what it's doing, it's quite normal. It looks quite normal. I expect this week to probably be a choppy week. You got a lot of data coming out first of the month. Unemployment numbers, PMIs, you got 4 central banks talking to you, you got 4 or 5 Fed governors talking to you. It's going to be a lot of news flow. And that's going to create, probably after an extended move again, that's going to create a very choppy market. And that's kind of where I leave you tonight. I think everything looks pretty normal to me. We'll just see how far it wants to come back. And my guess is it's just going to be a choppy market, some consolidation. It is first of the month. A lot of times people put more money to work, mutual fund inflows. But most of the big gains out of Europe probably have already happened. And so now you're going to set in and for the long term. And so that's probably going to lead to some sort of continued consolidation chop. All right, until next time, next week, I'll see you on the show, and I'll catch you on the daily show tomorrow. Have a great one. Take care.